Good morning, everyone. Today, we're setting the stage for a fascinating journey into the world of global finance and industry. We're diving into the story of Glencore, a global commodities powerhouse whose decisions send ripples through the business world. Glencore isn't just another company. It's a titan that has shaped the way raw materials move across continents and industries. With vast mining operations and trading networks, Glencore is a giant in extracting and distributing essential materials like copper, coal, and many other resources. Its reach extends to nearly every corner of the globe, employing a staggering 150,000 people who keep the wheels of industry turning. The company's influence is felt in countless economies, from emerging markets to established powerhouses. Every shipment, every trade, and every deal has the potential to impact industries and communities worldwide. But what gives a company like Glencore its financial muscle? The answer lies in the stock exchange, a dynamic marketplace where shares are bought and sold, and where fortunes can be made or lost in moments. Being listed on a major exchange, such as the London Stock Exchange, is more than just a badge of honor. It provides access to vast pools of capital, enhances a company's reputation, and ensures liquidity for investors. It's a gateway to global recognition and financial opportunity. For years, Glencore has been a cornerstone of London's FTSE 100 index, standing shoulder to shoulder with the world's most influential corporations. This position has helped cement its status as a global leader in commodities. Yet, in the relentless pursuit of growth and value, even giants must consider bold moves. Recently, Glencore weighed the possibility of leaving London behind to seek a new listing on a U.S. exchange, a move that could have reshaped its future and sent shockwaves through international markets. After careful deliberation, Glencore ultimately decided to remain in London, choosing stability and tradition over the uncertainty of change. This decision was not made lightly, as it involved balancing risk, reward, and the expectations of investors around the world. The story of Glencore's listing is a rare window into the high-stakes world of corporate strategy, where every choice can influence markets, economies, and the lives of millions. It's a tale of ambition, caution, and the enduring power of established institutions, reminding us that behind every headline, there are complex decisions shaping the future of global business. Why would a company like Glencore consider switching stock exchanges? The main reason: the pursuit of a higher valuation. U.S. exchanges like the NYSE and NASDAQ offer deeper capital pools and more specialized investors, which can boost a company's worth and visibility. Being listed alongside industry peers can lead to better analyst coverage and a more accurate valuation. A U.S. listing also elevates a company's global profile and attracts new investors. Recent moves by companies like CRH and Flutter from London to New York highlight this trend. For boards, it's about unlocking value for shareholders, even if it means considering a major change. The competition between global financial centers is fierce, and the potential rewards can be enormous. Glencore's leadership began asking, if a new listing could unlock billions in value, shouldn't we explore it? In February 2025, Glencore, one of the world's largest mining and commodity trading companies, announced a comprehensive review of its stock exchange listing. This move was not just a routine checkup, it was a clear signal that the company was seriously weighing a dramatic shift in its global strategy. The announcement sent ripples through the business world, as Glencore's leadership began to consider whether their future might be brighter elsewhere. The company's boardroom discussions took on a new urgency, with executives analyzing every possible outcome, much like a high-stakes chess match. Among the options, New York quickly emerged as the prime candidate. The city's financial markets are unmatched in scale and liquidity, and its appetite for mining stocks is legendary. For a company like Glencore, the allure of Wall Street was hard to ignore. Glencore's CEO, Gary Nagle, recognized the potential benefits of a U.S. listing. He believed that American investors and analysts might better appreciate Glencore's complex business model, potentially leading to higher valuations and more robust analyst coverage. Many of Glencore's global competitors had already established a strong presence in the U.S., making the prospect of joining them even more tempting. The company saw an opportunity to stand shoulder to shoulder with industry giants on the world's biggest stage. Glencore's unique blend of mining and trading operations set it apart from traditional mining firms. The leadership believed that this dual approach might be better understood and more highly valued by the sophisticated investor base in the United States. The news sent shockwaves through London's financial community. For decades, London had been Glencore's home, and its potential departure raised uncomfortable questions about the city's future as a global financial hub. As the 26th largest company in the FTSE 100, Glencore's possible exit was more than symbolic. It sparked real concerns about London's ability to remain competitive and retain its biggest corporate names. The move was widely seen as a test of whether London could still deliver value for its largest and most ambitious companies, or if the tide was turning toward other global financial centers. Glencore's review intensified the ongoing debate over the future of the London Stock Exchange, fueling speculation and anxiety among investors, analysts, and policymakers alike. In this climate of uncertainty, even the biggest players in the market were left questioning where they truly belonged and what the future might hold for the world's financial capitals. After months of intense speculation and debate, the answer finally arrived in August 2025. Glencore would remain headquartered in London, putting an end to swirling rumors about a dramatic transatlantic move. CEO Gary Nagle stepped forward to announce the decision, bringing closure to a period of uncertainty that had left investors, employees, and the broader market on edge. The allure of New York, with its deep capital markets and global prestige, was undeniably strong. For months, the possibility of joining the ranks of Wall Street's elite had captured imaginations both inside and outside the company. But moving a primary listing across the Atlantic isn't just a matter of paperwork. It's a massive legal, regulatory, and administrative undertaking, involving countless hours of preparation and negotiation with authorities on both sides of the ocean. Delisting from London and relisting in New York would require extensive filings, complex legal work, and ongoing communication with shareholders, many of whom had questions and concerns about the impact on their investments. The process would inevitably distract management from running the core business at a critical time, potentially affecting operations and strategic priorities when focus was needed most. After a thorough and careful analysis, Glencore's leadership concluded that the risks, costs, and potential disruptions far outweighed any possible rewards from a New York listing. There was no clear evidence the move would add value for shareholders, and many investors remained unconvinced that such a leap would benefit the company's long-term prospects. In the end, stability and operational focus won out over a speculative leap into the unknown. The company chose to steer a steady course rather than risk turbulence. The dream of New York, with all its promise and excitement, ultimately collided with the hard realities of global finance, regulation, and corporate responsibility. Glencore chose pragmatism over uncertainty, reaffirming its commitment to stability, its shareholders, and its future in London. Glencore's decision was rooted in hard financial facts. The direct costs of moving, legal, banking, and administrative fees were significant. For a company focused on cutting expenses, this was hard to justify. A major risk was uncertainty over inclusion in key U.S. indexes like the S&P 500, which can drive demand for shares. There was no guarantee Glencore would be included, making the move even riskier. Data showed that only a minority of companies moving from London to New York saw lasting benefits. The promised valuation boost was far from certain, while the costs were guaranteed. Glencore's board saw the math didn't add up. In the end, sticking with London was the prudent choice. Glencore's decision came amid tough financial news. Alongside the listing announcement, the company unveiled a $1 billion cost-cutting plan, including hundreds of job cuts. With profits down and net debt rising to $13.5 billion, Glencore needed to focus on stability, not risky ventures. Lower commodity prices and production declines squeezed revenues, making cash preservation a priority. Spending heavily on a stock exchange move would have been fiscally irresponsible. The market reacted negatively. Shares fell nearly 4% on the news, and the stock was down 18% for the year. Since the review began, Glencore's market value dropped by £5 billion. In this environment, stability was more valuable than chasing uncertain gains. The company chose to focus on its core business and financial health. In turbulent times, stability is a commodity in itself. Glencore's decision was a major boost for the London Stock Exchange. The LSE had faced high-profile departures, fueling fears of decline. Losing Glencore would have been a devastating blow to London's reputation. Instead, the decision to stay signaled that London remains a competitive, attractive financial center. It reinforced the value of London's international investor base, strong regulation, and time zone advantages. The move gave the LSE a real-world example to counter the narrative of decline. Glencore's choice may prompt other companies to reconsider leaving. London's enduring strengths proved their worth once again. For Glencore's investors, the decision brought welcome clarity. The review had created uncertainty and volatility in the share price. Staying in London means stability for shareholders, especially those in the UK and Europe. Large institutional investors tracking the FTSE 100 can keep Glencore as a core holding. While some hoped for a quick valuation boost from a US move, the focus now returns to business fundamentals. The company's performance, not speculative moves, will drive the stock price. Glencore's leadership signaled a commitment to prudent management and financial discipline. For long-term investors, stability and focus may be more valuable than chasing fleeting opportunities. Glencore's journey is a lesson in modern corporate strategy. The pressure to maximize value is relentless, but so is the need for prudence. The company explored an ambitious move, but a thorough review revealed the risks and costs. Glencore's leadership deserves credit for changing course when the evidence demanded it. The story shows the importance of balancing ambition with responsibility. Sometimes the boldest move is to value what you already have. Glencore's decision is a testament to smart, responsible leadership in a complex world.